Good morning, I'm Lois Carrier, Certified Financial Planner, and this morning we're talking to all of you millennials. Do you do Roth IRAs or do you do traditional? We're going to compare components of each. First of all, required minimum distribution. You have no clue what that is because you're too young, but the rule is that if you have a traditional IRA, after 70 and a half, Mr. Uncle Sam makes you take money out, and guess what? It is taxed. That's not a pleasant thing to have happen during retirement. Now, Roths never have any required minimum distributions ever. So traditional also will require taxes and be penalized if you withdraw before age 50 and a half, 59 and a half. Now, what happens about Roth contributions? They can be withdrawn tax and penalty free before age 59 and a half if they're held for 5 years. Now, if you think about that, let's say that you're 45 and you want to start a business and you take money out of your Roth because it's been in there for 5 years. That's nice to have. So it does supply money for earlier needs if you're not going to need money until 59 and a half. What about a deduction on the amount contributed? Well, for traditional, yes, you do get deductions, and that reduces your taxable income for that year. Roths do not offer deductions, but they do offer tax-free distributions. What about the contribution amount? Well, for 2017, the traditional and the Roth are the same, up to $5,500, and if you're over 50, $1,000 more. And what about taxes? When are they paid? Well, with traditional, full distributions are taxed the minute you take the money out. And guess what? Again, Roth distributions are not taxed. And what happens if you're offered a traditional, say, 401k plan at work, and it has a match to the contribution? Then what you want to do is contribute to the full amount to receive that match. And then you may want to put the other money in savings in a Roth. That way you have the best of both worlds. And then advantages to each on once you've retired really depends on the tax rate. Taxes do go up. I remember some that were 90% on income, but even then, I think you're going to enjoy a Roth more because you're not going to have to even worry about taxes in retirement. And that's a pretty cool thing to have happen. So try to do best of both worlds. That's what I suggest. Thank you.